Uh, yeah. Yeah, I'm still here. Okay. Yeah. Yeah, so the question that you're ultimately asking at this point is how do I finance my real estate investing strategy? So it sounds like no, no, no. All right, so let's first address the first thing. You asked, should I use a HELOC to basically build the second efficiency in the backyard to basically get more income? Depends a lot on what is the rate on your HELOC, what is your cost of money necessarily, because I treat every single piece of money like it's my investor's money. So even if it's like a HELOC, even if it's your own money, technically you are your own investor. But I would treat my HELOC, if I had a HELOC for $100,000 and let's say the rate was like 8% simple interest, if my HELOC had that type of capacity to where I wanted to use it to build something else, I would treat it the same as an investor. Treat it like it's a different investor and ask yourself, well, if an investor had $100,000 and they needed to get 8% plus more, would I still do the deal? If I was the investor, would I be happy? If I was the manager, would I be happy? So treat it just like an investor would. Now, in terms of the house hacking strategy, I think if you're involved in it, and if you want to get on the show for a while, I'm assuming you probably watched some of our other videos. Um, and a lot of people know my stance on house hacking right now, and it's not a positive stance, especially in a high demand market like Miami. And I live in Chicago, so like we also have high demand, high prices as well. So my overall feelings towards house hacking when values right now are kind of inflated just a tad bit, and the values are a little too high. congratulations on your success. But so let's go back to the basketball analogy. So for me, like right now, house hacking, it'd be very similar. Like imagine if a team, right? Imagine if a team, it's basically like what the Brooklyn Nets did, right? They sold out all their picks. They sold out a lot of their assets, a lot of their young assets, long-term assets, because they wanted to get like right now players. You know what I mean? So like Victor, I mean Joel, you probably watch a lot of basketball. Do you remember when the Brooklyn Nets, they traded for Garnett, they traded for Paul Pierce, and they traded away like all their assets? You still there? Yeah. So for me, like we're in a time in the market where yeah, so we're in a time in the market right now where the values are a little higher. Obviously, that's no secret, you know. So for me, I don't know. I'm not a huge fan of that house hacking method right now. In terms of your second question regarding to the contractor, one of the things that I've always been able to lean on is if the contractor has a bit of a network, I always ask around like the local area. Been your experience, and a lot of times that starts a discussion on like the actual group itself, to where people are like, oh well, if that guy doesn't work out, my contractor has been working for me for 10 years, 5 years. He's never been late. He's always done what he said he's going to do. And that always has been super super reliable for me. I've never had a bad experience with a contractor, an attorney. Well, I have one attorney, and had a bad experience with one property manager at one point. But I mean, ever since I used that method of kind of asking around the Facebook group, in the local group for real estate investing, or even just asking around, right? Like if there's a pretty predominant property management group in that area, they'll typically know the contractors and the maintenance guy, or even like a pretty predominant realtor. So I always like to use that option in terms of what you're looking for. But yeah, hope that helps.
I mean, back to the efficiency part. The reason why I want to put make an efficiency in the back is because I've been reading about the 1% and 2%. Right? So let's talk a little bit of numbers. If I will be able to create that efficiency in the back, which is going to be of course, one bedroom with a bathroom, it costs $35,000, and the rent will be at least $700, and that's like the cheapest. So that's almost 2% for the back.
Yeah, no, absolutely, man. I agree. I love also using like rule of thumb. So like obviously I'm very familiar with the 1% rule, the 72% rule. The one thing I will have to say about that is in real estate investing, a good chunk of my mistakes have been through relying on these rules. And the reason why I say that is because, well, you never know. Real estate is local. Real estate is so, like one of my biggest pet peeves that I see a lot of other real estate investing influencers say, and on YouTube and Facebook and these different platforms, is when they try and when they try and use one thing and they try and apply it to every real estate market in the country. For me, I think whether it's right or wrong, right? Like the 1% rule might be absolutely right on the spot, but for me, it's like I don't want investors getting in the habit of of making assumptions and putting universal things towards everything and thinking that these rules apply to every single deal. Because there was a deal that I did about 3 years ago where the 1% rule worked fantastically. It was great. It was amazing, and yet I didn't realize that the cap rate for that market was extremely extremely too low. Because yeah, like you could put the 1% rule, but what happens in a market where a 25% cap rate is terrible? And there are markets like that. Go to the south side of Chicago, right? There are markets like that where having a 12% cap rate or 18% cap rate is not a good thing. So I think that's awesome, man. You're looking for ways to increase income on your already existing property. I'm sure you've already gone through the process of making sure that it's good with the city, that you're pulling permits and whatnot. And plus,
yeah.
I mean, Miami, man, Miami's a hot spot.
No, it really is, man. Like I said, like I manage Airbnb, so I know the value of how much a room, can make a month and stuff like that.
Yeah.
And the fact that I know people that have done this and they're getting $700, $800, even $900 a month because the rents here are crazy expensive.
Yeah.
About 16 and up. So the fact that I know if I put $35,000 down and I can get at least the worst case scenario, $700 a month. That's what I was including if I put it on Airbnb. It's a great return, man. We're talking about, like I said, almost 2% rule.
Yeah, absolutely, man. Yeah, fantastic, man. Congratulations. Whenever I go to Miami, we'll have to hoop sometime.
Oh, no, of course, man. I don't know if you're ready now. I mean, I'm 6'7", 250. I don't know. But, hey, we can try it out, I guess.
Yeah, we'll tell you what, man. We'll play horse.
Okay. Well, that was the first chance.
Yeah, there you go, baby. Hey, thanks for calling in, man. I appreciate it.
No. Thank you guys for sharing your knowledge, man. I've been watching you guys for a while now. You and your brother.
Wow.
And all the interviews and stuff. This is a great show, man.
Thank you.
I recommend everybody to take advantage of this platform, man.
Wow.
You guys really know your stuff.
Thank you, man. I appreciate that. Thank you. Much love from Miami, folks.
Thanks, man. Keep striving for greatness, man. I appreciate that.
Yes, sir. Yes, sir. I'll talk to you later.
All right. Take care. Bye.
All right, that was Joel from Miami. Thank you so much, Joel, for sharing your knowledge. I'm sure you're going to be watching this recording at a later time. Much love to you here from Chicagoland all the way to Miami. So let's go ahead and keep it going, guys, right? The number 708-529-6527. Feel free to call in with your real estate investing question. How many people do we got live on here, Chris? We got 17. Oh, also shout out to the guys in the back, True Focus Productions, for putting this together. If you want to hire them, I highly recommend it. So there you go. We got the shout out. Oh, and also I'm being told somebody's holding up a cue card saying that I need to apologize for the audio issue. Well, I should let you guys all know I don't apologize for anything, but I will say sorry for the audio issues that's been going on. I don't know what the technical difficulties is. It's very hard for me to be aware on this side of the table, but I tell you what, I genuinely appreciate all the work that they do. So let us know, guys, if there's any ways for us to improve the show, right? Maybe, I don't know what more we could do to improve this show. But if there's any suggestions, feel free to type in the comments below. You know what I mean? Feel free to type in the comments whatever we could do to improve. And please keep it along the lines of how I could bring more value to you. All right? Please keep it along those lines. I don't want to see no subscribe to PewDiePie comments below in the live chat. But whatever that pertains in terms of me helping you guys grow as real estate investors and entrepreneurs, let me know. Right? Let me know if there's any questions that I could ask, if we could do this more efficiently. So again, guys, that's 708-529-6527. We got a live real estate investing Q&A session. We're able to talk together, chat on the phone as you would a friend. So feel free to call in, guys. I'm going to put this thing on speakerphone, and I don't know if I should put it closer. Should I put it closer to the mic? Okay, about right here? Okay, cool. So yeah, guys, feel free to call in 708-529-6527. Call in with your real estate investing questions. And again, guys, apologies for the technical difficulty that's going on. This is the first time we're actually doing calls with you guys, and we're trying to transmute it in terms of audio to this. So we're supposed to be getting more engagement, yet we answered 2 questions so far in, let's see, in 21 minutes. So I don't know if you could call that engagement, but we got a caller here from California. Caller, what's going on? My name is Daniel. You are on the Kwak Brothers Real Estate Investing live Q&A show. How is your day today?
I'm doing good. Hey, my name is Augie.
Sorry, what's your name again?
Augie, A-U-G-I-E.
Augie, how you doing, sir?
Doing good, doing good. Hey, question is, I've got a good possible deal on a fourplex. Guy wants me to come in with him on a deal. The value of it is in the area, 1.2. He's got a loan on it that's 438. He has to cover a lawsuit for 391.
Whoa, wait. Backtrack. There's a lawsuit?
There's a lawsuit by his family, one of his family members, to him.
Oh, okay. So we got a fourplex. Go ahead. Sorry, I didn't mean to cut you off.
No, it's good. That's fine. Fourplex, value 1.2, 1.1 to 1.2, all in the area, all really surrounding the whole areas that way.
Okay.
And lawsuit, he wants me to cover the lawsuit, come in and partner with him, and to buy his brother's position out.
Oh, okay. So what's the position? What's the lawsuit here?
391. So he wants me to, obviously it's going to cost me about $400,000 to cover that to pay him out.
Okay. Is there anything else that he wants you to come in at?
No, I would imagine that it needs. It's the rents are low right now. They're basically rents that were set from previous. So the rents could stand to go from $1,200 up to $1,600.
A piece?
On it. Yeah, piece, yeah. So from $1,200, the current right now, $1,000 to $1,200. The rents in the area are really about $1,800 to $2,000. But the way the property is, in condition, it's $1,500 to $1,600.
Okay. And so, I'm guessing you're being asked to be an investor.
Yeah.
Okay, cool. So yeah, what would you like for me to tell you? Would you like for me to tell you if this is a good transaction?
Well, obviously I need to find out. I do have some of the expenses.
Okay.
And the expenses monthly are $1,200. But yeah, I want to see if it's a good transaction or how to take it down. Basically, I would imagine all I'm thinking is, a loan on it against that property. But since I'm not on the note, will they allow that?
So you're not. Let's see. You're not on the note. You could get first position, perhaps like maybe through a promissory note, but I don't know how feasible that's gonna be. So here's a good thing. Are you in California? I'm guessing with these prices you're in California.
Yeah, yes I am.
Okay, so you're in California. I live in Illinois. Thankfully, we live in very similar real estate markets / laws. Like very similar, right? Like both California and Illinois, a lot of taxes. And we're also big blue state. So let's go back to the expenses because my mentors always tell me take care of the expenses. You said the expenses are $1,200 a month?
Yes.
All right, and what makes up that expense?
So the taxes of the majority, that's $570. Insurance, $150. I'm including a vacancy of $100 a month.
Okay.
Just for the what ifs repairs. It's an older building right now. Until we upgrade it, I'm factoring in $200.
In terms of maintenance.
Yeah.
All right, so I don't know how this would help you, but typically when I run numbers on a rental property in Illinois, I calculate 50% expenses. Now, let me ask you a couple questions regarding the expenses that will kind of get you thinking and maybe headed towards the right direction. Number one, I'm assuming that you verified the taxes, yes?
Yes, I did.
Okay, so have you also verified what the assessment is according to that tax?
The assessment?
Yeah. So you know how taxes get based on value?
Yes.
Have you verified what if the taxes right now are aligned with what the value of the property is right now.
Yes. Correct. No, not with the actual current value. No, that was the value is previous was 900,000.
Oh, so previous was 900,000. So one of the things I would have you kind of research and maybe talk to an attorney, or even if you want to talk to me privately, I'd be more than happy to share with you my contact information, and we could chat on the phone privately, and I'd be more than happy to help you.
Okay.
Because I think you're involved in a lot of our different groups and live chats, right?
Yes. Yes.
Oh yeah, totally. So I mean, I've seen your name pop up before, and I've seen you ask questions. So yeah, I'd be more than happy to spend time with you and actually help you out for free. So yeah, I would verify that, because for me, like right now, that 570 compared to the 4,800 I'm looking at in terms of the gross income, we're looking at maybe about 12%, maybe look like 13, 14, maybe around that ballpark. Now, where in California is this property? Like what county, what city?
Long Beach.
Okay, is that by Los Angeles?
That's by just south of LA, kind of southwest of LA.
Okay, cool. So it'd be pretty similar to here, like if you were to invest in a property, close to Chicago. So last year I was looking to buy 20 houses, and each house was renting out for $1,600 a month.
Okay.
They were only asking me for $1.9 million. Right? So they're asking $95,000 per unit, right? In this scenario, they're asking you $300,000 per unit.
Okay, right.
In terms of what your in is. So I was getting $1,600 a month. Even with my expenses at 50%, I was going to cash flow $5,000 to $6,000 a month. Now, keep in mind, I got owner financing on this. I was putting about $500,000 down because I wanted to build a lot of the equity up front. I was getting 3.5% interest, which was 2% lower than what the going commercial rate was. I was getting no balloon, and I had it on a 25-year amortization. It was a great deal. I didn't do it. I didn't do the deal because I was afraid of one number, and that was the taxes. The gross income last year was $384,000 for these houses, right? The tax, yeah, that's phenomenal, right? That's amazing, And these are single-family houses, right? So low maintenance, higher quality tenants compared to apartment buildings. The taxes on these things was $144,000 a year.
There you go.
And the reason why, by the way, the owner told me, the reason why it was that low is because he had a great tax appeal attorney. So as soon as I were to take it over, not only will it trigger a new assessment, but it would have also put me in a position where if there's a 1% increase on my taxes, that's $20,000 just about.
Yeah, 20.
For using cowboy math. $20,000 divided by 12, you're looking at almost $2,000. That's taking my cash flow from $5,000 to $3,000. If I had an investor at 50% of the deal, you're talking about their returns going from $1,500 a month, right? So $1,500 a month, all the way from $2,500 a month. That's a 40% decrease in their return. So if my return to them on an annualized basis is 10%, that's really good, right? 10% return on a long-term buy and hold, that's fantastic, right? Like, you're doing better than municipal bonds, you're doing better than government bonds, which right now are the hot commodity, considering that a lot of the treasury bonds were issued 10 years ago. And you're doing better than the best month in the stock market, which is 7.2%, November of 2018 and November of 2013. So you're talking about going from 10% to 6%, to if you're at 6%, you're pretty much at market average, if not a little below that. So that's a huge difference in terms of what's going on. You're talking about 1%, and you're in a scenario where you have to pay $300,000 per unit to be in that position. So, I mean, I'm just sharing you what my thoughts are. I don't know who you're investing with. I'm sure he's a nice guy. I'm sure he's a good guy, good investor. I don't, you know what I mean? Like, when I heard the word lawsuit, kind of scared me a little bit because, you know, like my rule of thumb is like, well, you know, if somebody's getting sued or if there's a lawsuit, that's a typical red flag for me to not invest with them. Because, you know, obviously I've been on both ends of the spectrums where, you know, I've been the investor, I've been the lender, but, you know, a majority of the time, I'm the individual that the lenders want to work with. So I've seen both scenarios. So just kind of, again, without knowing too much about the deal, and again, Augie, if you want to contact me separately, I'd be more than happy to chat with you individually, and kind of go more in depth about this deal. But kind of my assumptions right now is that the expenses are a little too low. So here, I'll kind of bullet point it for you. So expenses are too low. And I don't know what the brothers' position you're buying out is. Is it 50%?
Well, the way it sits now, the mom left this to them, and it's you know, going through a probate. So now I'm assuming that they can't refinance it. They don't have a position. So the guy that I'm going in with is the actual owner.
Yeah.
So that in itself would be like owner financing his part of it. So I'm assuming that he wants to get cashed out, but one of this owner doesn't want to sell. The other brother is suing him for not selling. That's without knowing the exact details into it, but that's what I'm getting.
Okay. So do you know if it's? I'm assuming it's a 50% partnership.
At the current rate, yes.
Okay.
Yes, that's my exact assumption. Yes.
Now, how much do they owe on it? I know you said it before, but I was kind of jotting some things down.
That's all right. 438.
438. Okay. Do you know what the debt service is? Like on a monthly basis?
I think he's taking care of it himself.
So he's paying. So he's paying the mortgage himself, not out of the tenants, not out of the income from the building.
Oh no. It's what was it? Sorry, I got the 2400.
2400. Okay, that sounds about right.
Yeah.
So you're at 3600 total.
Yeah.
Yeah, I don't know.
8100. Want to go to 8100?
So your cash flow is.
Sorry about that.
No, you're fine. So your cash flow is $1,200 a month, hypothetically speaking. And I'm guessing the expenses are low, partially because he's managing it himself. Is that pretty safe to assume?
Yeah. He's currently has 45.57 on the monthly as far as what he's bringing in.
Okay. Yeah. So I'm willing to bet the reason why the bank's not refinancing or financing right now is the banks have what's called a DSCR. They have what's called a debt service coverage ratio. And the DSCR is pretty universal, but depending on what bank you're with, some banks are going to issue a 1.2 debt service coverage ratio, and some banks are going to issue a 1.3. But on average, it's 1.25. What that basically means is that what the banks want to see is they want to see that net income, the net operating income, cover at least 1.25 of the debt service. That's what they want to see. Which in this case, it's 1.33. But again, you're in a position where even if the expenses were to go up a little bit, you're getting pushed down below that 1.25 line. So I think the reason being is that, I mean, right now I'm not investing. like if you ask me where I'm investing, I'm not investing in California. I'm not even investing in my home state of Illinois, because the prices are just too dang high. You know, like it's like for me, it's more feasible to do deals where I'm doing now, which is Indiana. Which, by the way, you know, I'm actually cash flowing $5,000-$6,000 a house for a property for a single family house I bought for only $135,000. And it's because, you know, I do a lot of economic research where that's what I always preach. I always preach like everybody should do economic research. But for me, it's like, yeah, I could go to California and buy a $1.2 million building and cash flow only $1,200, best case scenario. Or I can go to Indiana, buy a $135,000 house and cash flow 4 times that, 5 times that. So again, I'm not pushing down your friend in any way, shape, or form. I'm not trying to be disrespectful, but I think there's a lot of angles that point towards, like, if I were you, if I'm in the position that you are in right now, and I had this capital that I want to deploy, I wouldn't do the deal if you were to just ask me. Personally. And I'm not gonna lie to you, and I understand that might cause your buddy to be like, "What the heck, Daniel? Like, why did you screw up my deal like that?" I'm just gonna be honest no matter what. You know what I mean? Like, if it was a good deal, I'd say yeah, go for it. But for me, there's just a couple red flags that I do not want to ignore, and I just think that. And let me ask you, Augie, is that 3.9? Is that 391,000? Is that cash or is that leveraged?
That's leverage.
Okay, so I'm guessing, is that like a line of credit?
Well, that's what I'm trying to figure out how to obtain it, and what the best. Really turned me on to listening to you because it makes total sense. But that would be me coming in with a new loan or partnering with him with the refi, and I'm trying to figure out how I would go about that, or what the best way would go about that.
Yeah, I don't know. I don't know a bank that is going to refi if the margins aren't that thick enough. Now I understand that the plan is to raise the rent $400 per unit, but I mean, there's a lot of growing pains that happen with that. Like, for example, I got a large apartment complex that I own, and we're raising the rent $300 per unit. Because it was 300 below market value when we first bought it. I bought it 2 years ago. I haven't gotten a check from that property yet because we had to deal with maintenance issues, vacancy. Whenever somebody moves out, that's $5,000 that I have to fork out of my pocket to pay for new carpet, new paint, because there's a new tenant, right? So raising the rent by that much, especially like 33%, raising the rent 33%, that's a lot. So you being a partner, there may be scenarios where you would have to put in additional capital to cover, tenant turnover. So that may be a case. Okay, cool. There was a beeping. I didn't know what that was. All right. So yeah. So so there may be some growing pains. You know what I mean? Because, like I said, I own this large apartment complex, and you would think it would work better in a large apartment complex because there's more units to cover the loss, but that $1,000, that's not liquid cash, and there's going to be some cost to that money attached to that. And the last thing I'd want is for you to pay that cost of $400,000 out of your pocket every single month for a year or two because the turnover is too dang high. And I'm just going to do some math right now. So, I mean, even at, if you're receiving, so if everything goes according to plan, Augie, you're going to be cash flowing on your end $600 a month, right? Times that by 12, that's $7,200. You divide that by, let's say, cowboy math of $400,000, because let's say $9,000 you have to put in for turnovers and extra expenses. So $400,000, right? You got to put that in, right? I mean, you're talking about a return at this point of like, yeah, pretty low. I don't know what that number is, but yeah, I don't know if I'm absolutely confident. It's probably like around 1.8%, right?
That's what I was. Yeah.
And I just kind of did that in my head, so I don't know how accurate that number is, but is it 1.8%? let's see. I'm gonna use my calculator here.
Okay.
So let's do 7,200 divided by 400,000. Yeah, I was right. Okay, so that's 1.8%. I don't know if that 1.8% is enough to cover the cost of borrowing or using that $391,000. I just don't know if it is. If it's a line of credit, you might be getting charged 5, 6, 7%. In that case, you're losing money if nothing goes wrong with this building. So yeah, Augie, I'm kind of scratching my head here. I don't know what to tell you. If I were you, I wouldn't do it. It actually looks like a terrible situation for you. So I don't know how much that means to you, but hopefully I did a good job breaking it down.
No, yeah, you did. I can't tell you I was anywhere near the ballpark, but there was a couple things that I missed, so that's what clarified it for me. It's like, okay, well, now I can see a little bit clearer.
Yeah.
I've only done the single family, so would be my first time into any type of multifamily. Yeah,
absolutely. And Augie, if you ever want any more assistance, if you ever want to chat with me and pick my brain, feel free to contact me. You're more than welcome to do so.
Okay, appreciate that.
Yeah, absolutely. Thanks for the question.
Okay, thanks for your time, man.
Yes, sir. Bye-bye.
Bye-bye.
All right, we got through our second caller. I love it, man. I love the energy. I love where we're going here. I love that I was able to use the whiteboard and break this down for you guys. Man, this is cool. This is really, really cool. And if you guys didn't even notice, we actually had a camera change in the process. So shout out again to True Focus Productions for doing a great job, literally figuring things out on the spot. So if you haven't checked out, by the great work that True Focus Productions does. They are actually the exclusive provider for all the Kwak Brothers media, education, curriculum. They are the exclusive provider for a reason. All right, so it's currently 11:45. I think we have time for one more caller. So feel free to go ahead and call in, guys. 708-529-2527. And this is the first time we're having people call in. What do you guys think? Let me know in the comments if you like this platform or if you like the platform of the chat. Let us know what you think. What is better for me to deliver value and content to you guys, right? That's what's important.
We have a question from Rob.
We get a question from Rob.
He said, are multifamily properties with bug infestations a deal breaker or expected?
So for me, if you're buying an apartment price, am I gonna get this? Am I gonna get that? Because for me, if there's issues of bugs, right, like bed bugs, whatever, that for me is not a problem itself. It's a byproduct of a much bigger problem, which is like, what's going on with the maintenance. How did the seller and the owner treat the building beforehand? That for me is a byproduct of a much bigger issue. So yeah, it may be a deal breaker in some way, shape, or form. Now, if you are the owner, then obviously that's on you. You're gonna have to solve that. But yeah, it's not a deal breaker, but it's like, man, it's a big issue. It has to be addressed, and I gotta get what value I can for taking over that building with bug infestation, so to speak. Yeah, good question. Thanks, Rob. Oh, 65. Oh my gosh, 6527. So I accidentally said 2527 because that's actually the address number of one of the properties I just recently bought, so I got confused. Point to what?
It's actually on the screen.
Oh, is it? All right, cool. Right there? Right there, cool. All right, 708-529-6527. Sweet. Any more questions? Let's call in, guys. Feel free to call in. Whether it's chat, whether you're calling in, we got time for, I think, one more question. We'll go ahead and wrap this up. And I got a pretty sick announcement at the end that I'll go ahead and announce. Any more questions, Chris?
No, we just have a comment from Lone. They prefer the chat because phone conversations can take too much time.
Yeah, so we got a comment. So somebody prefers the chat because phone conversations could take too long. I can completely understand phone conversations can oftentimes take too long, especially if you ask my girlfriend. Yes. Huh? But you can learn a lot, absolutely. Yeah, and I think there's pros and cons of having the phone conversation just because I'm able to ask follow-up questions and I'm able to get deeper in their situation, which does provide, a little bit more depth in terms of value. So I'll go ahead and make this announcement, guys, and then we'll go ahead and wrap this up. So June 11th, we're launching our real estate investing education program. I'm super excited to announce it. We're going to be doing a webinar at 7 p.m. June 10th, the night before, to launch this real estate investing education program. Now, guys, what this basically is all about creating passive income. So we've designed 16 classes that is engineered and geared for the individual to learn how to get passive income. And we're actually including, right, because myself and Sam, we've purchased a lot of different real estate investing education programs before. I mean, we've paid $20,000, we've paid more than that sometimes for real estate investing education. And what this program is, it's basically everything that we learned in our career along with personal experiences, because, between Sam and I do all our real estate transactions. It's a lot of personal experiences that I've learned being on the road, doing different types of deals, whether it's nightly rentals, fix and flips, multifamily, owner financing, single families, right? It's an accumulation of all my experiences and everything that I've learned from different programs, seminars, all bundled into one. And one of the things that I really take pride in terms of our education is most of the classes are instructed by yours truly, and I like getting to the point. I don't like wasting people's time. I think when a company advertises and takes pride in their 10-hour classes or their 7-hour classes, I don't know how prideful they should be, because when I actually bought those programs, the 7 hours wasn't 7 hours of content. It was actually 1 hour or 2 hours worth of content. So all our classes are 2 to 4 hours worth of jam-packed content that you do not want to miss. And guess what? We're charging it for a fraction of what the other companies are charging, because the other companies out there, if you want the information that we're putting out, you're going to have to pay $15,000, $20,000, $70,000. I've seen programs as high as $80,000. We're only charging $497. That's right, only $500 to get the same amount of value that you would if you were to pay 70, 80 grand. So June 10th, 7 p.m., we will be going live. Feel free to go ahead and check out the kwakbrothers.com/learn. Again, that's THEKWAK brothers.com/learn to get more information on what we're launching. And I gotta say, I'm extremely proud of what we put together. We've been working on this program for the last, 6 months, I think, 5 to 6 months, and I'm truly, truly happy and proud of what we put together. So that's gonna wrap up our live session here, guys, on YouTube. Much love to you. I love you guys, Kwak Brothers subscribers. If you haven't subscribed yet, join our family of subscribers. We put out a lot of content on personal development, debt acceleration, real estate investing, business in general. Much love to you guys. I'm always praying for the people that is involved in our program and our family. So thanks, guys. Much love to you. My buddy Chris is holding up a one finger. I am wondering what that means.
We have one question, we have about 8 minutes left.
We got one question, we got 8 minutes left, so we're going to do it. We're going to do it right now. Go ahead. What's the question, Chris?
So the question is from Bold, Black, and Beautiful.
Bold, Black, and Beautiful asked us a question. I love the name. I love the name. All right, what's the question?
Hi, we're about to put our home for rent. Any advice as to how to formulate a rental agreement? Or is there a place that I can get one already done?
Yeah, so any lease agreement that a property manager is going to issue, a tenant will do. You could always go as far, if you really want to be careful and really make sure you have your I's dotted, T's crossed, you could actually have a lease agreement and have your attorney look over it. It also depends on what state you live in, because a lot of the landlord-tenant laws do differ. I know for one, my home state of Illinois, we have by far one of the most biased against landlords, landlord laws. Like, they favor the tenant 99% of the time. Like, it is ridiculous. So be familiar with the landlord-tenant laws. Make sure your lease agreement with your tenant does reflect that. I know you can get like a general copy of a lease agreement from like a property manager. I'm sure Google has done wonders. A real estate attorney can also issue you one. And if you want, feel free to reach out to us, the Kwak Brothers. Send us an email at info@thekwakbrothers.com. That's info at the Kwak Brothers, TheKwakBrothers.com. And we'll also give you a copy of the lease agreement that we use with our tenants, that our property manager uses with the tenants. So if you want a copy, feel free to email us and we'll send you a free copy. So thank you so much for the question, Bold, Black, and Beautiful. Any more questions left?
Alone as a comment, she said that she's interested in taking her mentor's class, so I guess the best way is for her to...
Yeah, again, go check out thekwakbrothers.com/learn, or if you want to email us directly at info@thekwakbrothers.com, INFOTHEKWAKBROTHERS.com. Feel free to, we do offer a coaching, and right now, I'm only taking about 25 more clients, one-on-one clients for the rest of the year. My goal was to take about 48, which is like 4 new clients a month. And I'm already about halfway through that point already. And it's only the beginning of June. So I actually didn't advertise that much in the first 5-6 months of this year about my one-on-one, just because I'm always weary, because I struggle with one-on-one clients, because I much prefer to be speaking on stage or in front of a camera, but I like doing one-on-one because the individuals definitely grow more and they grow faster and they learn more as well. So I do offer one-on-one coaching, and I'm the only person that's going to be doing the one-on-one coaching for the Kwak Brothers. So you're not going to be getting a Joe Schmo or a random guy. You will be getting me as the coach, and I'm only taking on, again, only about 20 people for the rest of the year, just because I got my deals that I have to do, and I do my business well. I do have a life sometimes, so I try and maintain a healthy level of time that I'm able to spend with my family, my girlfriend, and also for my own business. Now, for the one-on-one clients that I do currently have, I do share a lot of what I do in my own business with them, and I do allow them to do and utilize the strategies that I use along with my network. So, it's been beneficial. A lot of my one-on-one clients so far have been very happy with their decision. I don't think I have any client at all right now that regrets it or even feel okay about the decision. I think every single one of my clients are very happy with the value that I provided for them, which that's the way it should be, right? That's absolutely the way it should be. So thank you for the statement. Thank you for the comments. Check out thekwakbrothers.com/learn. Or email us at info@thekwakbrothers.com. I'm going to do the hotline bling dance. All right, any more questions, Chris?
Nope, everyone's just saying thank you.
All right, well, thank you, everybody, for joining me in this time together where I got to answer your questions and hopefully bring you as much value as you possibly can. I'll see you guys next Monday at 11 a.m. Central Time, and we'll go ahead and have a marketing meeting, contemplation, if you will, on whether we should go with the chat or stick with the phone. So thank you guys. Much love. I'll see you guys next Monday.